AI, prove it or pay for it. AI doesn't guarantee upside anymore. Microsoft, Meta, Tesla, and Apple, the market wants proof, not promises. And this week, the market will decide who has it and who doesn't. The biggest earnings week of the quarter. Microsoft, Meta, Tesla report Wednesday after the bell. Apple on Thursday. Together, these four companies represent over $10 trillion in market cap. And this week, investors aren't buying their stories anymore. They want to see results, they want margins, and they want cash flow. In other words, show me the money. Now let's break it down. Now, Microsoft has spent tens of billions of dollars building their AI factories. Azure, Copilot, massive build-outs. The positioning is clear. Now investors want to see returns. Here's what matters this quarter. Can Azure growth hold up despite capacity limits? Is Copilot becoming a real enterprise revenue? When does AI stop pressuring margins and start expanding them? And what happens to CapEx from here? The narrative has shifted. It's no longer Microsoft is a winning AI. It's winning is nice. Where's the payoff? This report needs to show AI demand turning into a durable, high-margin revenue. Now, Meta. Meta keeps executing. Ads are working. Engagement is strong. AI is improving targeting. Yet Meta trades at the lowest multiple in the Mag 7. Why? Because investors are worried about their spending. This quarter, they're watching, can growth survive a softer economy? Are Reality Labs losses stabilizing? And how aggressive does AI spending get in 2026? And is there real monetization from Threads or WhatsApp? Last quarter rattled the market with rising expenses. This quarter, Meta has one job: prove it can invest in AI without destroying profitability. If it does, that evaluation discount won't last. Next is Tesla. Tesla is no longer being judged as a car company. Deliveries are down, competition is fierce, and margins are under pressure. So the market is asking one question: does the autonomy story actually move forward now? Investors want to see margin direction under pricing pressure, continued strength in energy storage, real progress on robotaxi, cybercabs, and Optimus, and a 2026 outlook that points back to growth. At this evaluation, Tesla doesn't get paid for promises. This report needs proof that autonomy is moving from vision to execution. And one last thing, Powell, the Federal Reserve, will be announcing today. No rate change is expected, but of course, tone matters. A hawkish surprise could add pressure across multiple tech names. This week isn't about hype. It's about returns, margins, and good old cash flow. AI is no longer a vision trade. Investors want stocks to show them the money. This is why we don't trade the hype. We trade math. If this breakdown helped you think more clearly about earnings risk, join us live every day at 3:45 p.m. And if discipline, no fluff market analysis matters to you, like and subscribe and follow along. Math makes money.